Welcome to another edition of One on One. Greg Sher with you here on this Monday, the 21st of July, joined by Pavan Agarwal. He's the CEO of SunWest Mortgage, also the founder of Selligence, and the creator of AngelAI. This is a conversation a lot of people are going to be interested in hearing. Pavan, how are you, my friend?
I am doing great.
It's good to see you.
We both made it back alive from DC, which is...
I know. Well, for me, it was easier than you. I just had to get in my car and drive 20 minutes. You had to go all the way back to Puerto Rico, where you live. In fact, in 2013, you made a big decision to move your business to Puerto Rico because there's so many benefits. In preparing for this conversation, I was really fascinated by what you shared in a previous interview, that Puerto Rico actually gives you 50% of R&D to tech companies back to the owner and the founder. That's quite remarkable. Is that still the case?
That is still the case, and you've been doing your homework. I'm impressed.
Well, you would expect nothing less, I'm sure, right?
And I am wearing my Puerto Rico colorful shirt here to get everyone in the mood to move on down to Puerto Rico. And yes, so if you are building technology, doing R&D in Puerto Rico, the Puerto Rico government will give you 50% of that back in the form of tradable tax credits.
Interesting. Well, you're doing a lot in your life, and you're really trying to make an impact. And the reason you and I were together just about a week and a half ago in DC on the 8th of July was you put together a summit of more than 150 industry and government officials to talk about digital money and AI and what it means for economic progress. And you talked about mortgage, and you talked about the fact that I believe you said 2 billion people in the world are unbanked. So there are a lot of problems you're trying to solve. Of course, this audience is mainly mortgage related. So let's start there. What problem in mortgage are you solving?
Well, we're solving the cost and the complexity of doing mortgages, and those translate into exclusion. People don't only think about it that way, but cost and complexity results in exclusion and people getting shut out. Because those costs have to be transferred to the consumer. Somebody's got to pay for it sooner or later. And in 2008, the investors paid for it, and we had a meltdown. We did a hyper simplicity. We didn't underwrite anything. Everybody got a mortgage, and no one could pay for it. Well, many people couldn't pay for it, right? And so the bondholders got lost there. We overreacted, and it was so bad. I don't know if you remember the headline from that time where Ben Bernanke, who was the Fed chairman at that point, and he had just retired, and he couldn't get a mortgage. Right? The Fed chairman didn't qualify for a Fannie Mae mortgage. Right? That was a headline, I think, in 2009.
I remember that. Yeah, I do.
Right. So we went too loose, like no underwriting, to over underwriting, and quite frankly, since Ben Bernanke couldn't get a mortgage to today, the guidelines haven't changed a whole lot. They've gotten a little looser, a little bit more flexible, but they really haven't changed much. So, and that results in exclusion, that results in high costs, and that results in minorities and people of just in generally who are marginalized, not appreciated as much, being left out of the system. People, the way I explained it last week was these guidelines were written in 1960, right, with the 1960s white picket fence mentality, right? And today, I don't know what the stats are. I'd say about half the country is doing some kind of a gig working, right? It's a gig economy, and the employment isn't so straightforward. And not that you can't do these help these people with these guidelines. It's just that it's really hard to get the paperwork through with the way the guidelines were written. So that translates into higher costs and higher underwriting times, and this what I hear is like, for manual underwrites, FHA deals is like one loan a day per underwriter or something like that, 1.25 loan a day for FHA underwriters. And those are the borrowers that need it the most. And when it's that expensive to underwrite a loan file, and that error prone, people can get left out. And so, yeah, go ahead.
Well, no, I just want to know how you're solving that problem. I know you are, and I want you to walk us through your business because, I've heard a lot about Angel AI, right? And I think a lot of people have a lot of questions. I posted a picture from our breakfast the other day where I said, I'd be smiling too if I had a cost to produce of $200 or less, and people are, wondering, how in the world you accomplish that and what are the metrics that you use for something like that. Obviously, you're leading into that conversation now by talking about how machines, can get to these answers. But you would think in order to get to that kind of cost to produce, you need the machine to get to every answer. So unpack that for us.
Yeah, so I saw that post. Thank you for that post, and I did read through all those comments, and I was going to respond to some of those, and people were asking, well, what's included, what's not included. And I said, you know what? Let's not spoil this podcast. I'm going to save the mystery for this podcast. So here are the answers to many of the comments that was left on their post. So here's what our cost to produce that $200 calculation comes from. It is everything from loan setup, loan processing, underwriting, clearing conditions, closing, right, and post-closing through trailing docs. Okay, so it does not, and let me tell you what it does not include. It does not include commissions. It does not include out-of-pocket expenses like work number and credit reports and appraisals, things like that. Okay, so this is purely the operational cost, putting a loan from beginning to end.
So what's the context that IMB should look at it? Like, what is the comparison? Like, we hear all these, and this is not why you're on here today, obviously, but I want to address this now, and then I want to go into how you see the future, because you're definitely right at the epicenter of it. But like the Mortgage Bankers Association, they say the cost to manufacture a loan is $12,700. I talked to Stan Middleman, who's the founder and CEO of Freedom Mortgage. He says the cost to produce a mortgage should be 30 or 40 basis points. I talked to you, and you're like, well, our manufacturing cost is this. So what is the comparison? If like our cost to produce at NFM it bounces around, it vacillates between 2,300, 2,700, depending on the moment that we're in. Like, tell me.
Yep. And there's one more factor that's really important. That was one of the comments that was on that post, which is, what's the channel? Is it retail? Is it wholesale? Is it correspondent? Right. And obviously, depending on the channel, the cost goes lower because you're doing fewer things. Right? And the cheapest is the correspondent, where it's the review and purchase. In our model, right, whether it's because it's completely automated, whether it's correspondent, wholesale, or retail, right, it costs us this almost the same. It's a little bit cheaper on correspondent, but on retail and wholesale, it costs us exactly the same, because we actually have one single machine that goes through. So we don't have a separate. A lot of mortgage bankers have a separate a wholesale channel, a wholesale operations team, and it's completely separate from a retail operations team. And in our model, it's just one operations team, and it's a very small operations team. It's really one technology that puts it all the way through.
And you have all channels, correct? We
have all channels, right? We have call center, retail, wholesale, and correspondent. So it's very easy for us to compare, and it's easy for us to have all channels because it's just one process for all of them.
How much volume are you doing between all the channels?
I think this last month we did about 400 million, maybe a little more than 400 million.
That's incredible. And your company's been around for 45 years. Your dad founded the company, and you have been a machine guy since you can remember. In fact, one of the things that I heard you talk about in a previous interview is how you were the first lender to be able to automate the truth in lending, when it took many people 3 days to make that happen. But you made it like it was a side project of yours to be able to figure that out. And, that's pretty fascinating too.
Yeah, that was back in 1982 when the truth in lending was, I don't know, maybe it was a year old or something. And you had to use data centers, right? Service bureaus. You fill in you use an IBM Selectric typewriter, type in this big long form, put it in a trans box, and it took a day to get there. They ran it through the service bureau, and then they print the truth and then they transbox it back to you. And that's why a lot of people don't understand, why does the government have a 3-day rule? Because it used to take 3 days to generate one. That's why there's a 3-day rule.
One of the things you talked about when you were up on stage, and you're really great on stage too. I just have to tell you that.
Thank you.
You really hold a room down. You don't seem nervous at all. I know you've done it, thousands of times at this point. But one thing that you talked about, and one thing I want people to understand about you, is you want to help as many people in the world as you can. And, I want to talk about that momentarily, but let's drill down domestically here on some statistics that you shared. And that is that Blacks are 2 times more likely to be turned down for a loan than whites, Hispanics 1.75 times more likely, and somehow veterans 3 times more likely to be turned down.
Yeah.
Why is that? And what's your vision for helping fix that?
Yeah. So first, let me go into how we get the data, because I get challenged on that. It's like, well, how do you get that? It's real simple. You just take the national, anyone can download it, the HMDA data, and you can analyze the data. It's all there. It's there for your consumption. And you can, because everything is in there. What's not in there is whether the person is a veteran or not, but then you can take a look at VA loans, right? Because you have the loan program. So from VA loans, that from there you can then determine the decline rates. So I think the best way to explain it is by an example, right? So one of the loans that clearly stands out in my head is a loan that one of our retail loan officers did. It's a traveling nurse. So she has a different job every month. So a different W-2 and a pay stub every single month, right? Or every other month or so. Hardworking lady, doing great service for the community. But when she goes to apply for a mortgage, she's got like 20 W-2s and 20 year-end, job end pay stubs, right? And so most loan officers don't even want to attempt to try to do that, right? Not because they don't like her, not because they're discriminating against her, but they're like, I know how it is. Loan officers are like, if I mess it up, my relationship is going to be ruined with the realtor. It's better to say no than to try to do something that he can't handle. So she was declined multiple times, and many times the loan officer wouldn't even take the app when they saw that. Okay, so when she worked with our loan officer, sure, give me all the W-2s and pay stubs. Okay, and he took a picture of them, dropped them into Angel, and in about 3 hours he got the approval. She calculated the income and said, here's what she qualifies for, and then that was it. And the magic of it is he as a loan officer can feel confident, because he can go back and tell the realtor, okay, I've got an approval. She qualifies for this much based on the documents she sent me, right? And he can say it will close that way, right? Because if Angel had made a mistake, she's reviewing through 20 plus W-2s and pay stubs. If she'd made a mistake in calculating the income, right, I'm going to fund that loan anyways. I'm going to balance sheet it, and that's the warranty that we give.
So AI is going to take out the racial bias in some ways, yeah, because
it's and I don't really call it racial bias. I don't think Americans are racist. I think it's probably not even a basis point of Americans are racist. Americans are good people, but I think that.
Well, there is racial bias. I mean, there have been studies, when it comes to appraisals and approvals for loans. I mean, it is a thing. So,
okay, well,
that's a different topic for a different day. We can stay. We can stay on course here. I know that
I'd rather focus on the problem that we fixed, because it's more fun fixing problems than talking about problems. So what I've seen on the loan side, at least, is the bias is more towards, like in this example, the complexity, right? And what I've studied, and based on the data I've studied, is that minorities, Hispanics, Black borrowers, veterans tend to have more complex paperwork. Okay, it doesn't mean that they're less eligible, less qualified, just more complex paperwork. And as a result, they're more likely to be declined. And so I attribute it all into that, and not towards the actual race. So it's the complexity of the paperwork acts like a proxy to the race.
Let's go back to the not to the $200 alone cost, but what's involved to get there. Because I know people who are listening are going to be like, wow, our cost to produce is 10x, 20x that number.
Right.
Like, what is your message to the mortgage community on the things that they can be doing and should be doing to bring down their cost to produce using AI?
Yeah. So, I mean, a very simple way to look at this, like any mortgage bank listening to this, they have a good, solid, big producing loan officer. That loan officer probably has 2 or 3 LOAs, right? And at least one dedicated loan processor, right? And that's probably a loan officer doing 10, 15 deals a month.
That's right. Those are right. Those numbers are right on. One processor, right. 2 to 3 LOAs. Yep.
Right. And if you add all that up, that's going to be a good 40 basis points, right? 30 to 40 basis points. And that's that. You've already blown past.
Yeah. It's easily 200 grand.
Yeah.
Right. It's in overhead right there.
Yeah. Right. And so you've already blown past Stan's 30 basis points operating costs just to support the loan officer. And that same loan officer works with AngelAI and can literally eliminate all of those people.
All right, we'll stop there. How's that possible? Because a lot of what LOAs do is communicate with the borrowers, have conversations, get through sticky situations and complex employment and multiple jobs and sometimes 1099s and tax returns. How do you get through all that? Or are those more manual? Like, are we just talking about clean vanilla cookie cutter stuff, or does it go for everything?
No, it goes through everything. I mean, if you look at our book, we do a lot of alt doc or no credit FHA loans. We do a lot of low credit score VA and FHA loans because those people just get left behind, and that's what we crunch through, and we get them approved. Okay, and so if you really think about an LOA's job, an LOA's workday, and a processor's workday, it's a really hard, and we make these poor people do things that they're not supposed to be doing. We ask them to be inhuman, right? We ask them that, okay, you're going to work with this borrower, you're going to get his tax returns, his explanation letters, and whatever. You're going to read it, you're going to understand it, and you're going to make sure it's exactly what the underwriter needs. Right? You're going to make sure it meets the guidelines and exactly what the underwriter needs. And if it isn't, you're going to go back to the borrower and you're going to explain it to them, and you're going to get the right document. And if you don't do that right, it's going to affect your scorecard because we're going to get kicked out from underwriting, and then we won't have that one day underwriting. Right? So we're expecting loan assistants and processors to be as good as the underwriter, if not better. Okay, and not make a mistake, because if they make a mistake, like imagine a loan assistant makes a mistake and says, yeah, okay, this W-2 is fine. It goes to the underwriter, and the underwriter says, no, you can't use it because of, whatever, right? That makes a loan officer look real foolish, because now you got to go back to their borrower and ask for something else. Okay, so that's that whole tension and stress in the system right now. That's why it's such a stressful business. And that's why we pay LOAs and processors so much. We're asking them to do, frankly, what is not humanly possible.
How do you remove the friction, though, in the situations where it's a tricky situation? Like, how do you replace the dialogue? Is that an agentic AI having conversations with consumers? Is that the answer?
Partially, that's the answer, but the real answer is. And if you stop and think about it, anybody who, we're all originators here, and when the best originators, when you're sitting with the borrower and he gives you a document and you look at the document, and if you know the guidelines inside and out, and you're the best in the world, you can immediately say, okay, well, I got a problem here. Can you explain these things? Right? right? You can
Right.
turn
Yes,
around
that
that
makes
fast.
sense. Yeah. So you're saying
Right.
that the machine does that and will ask them the same questions, but with obviously more efficient and more accuracy.
Exactly, because the
Okay.
machine, if you so what we say is get the documents, put it in the machine. Right? I don't want anyone, I don't want an LOA, a processor, even an underwriter to second guess the machine. Take the document, put it in the machine, let the machine tell you what's right or wrong. And guess what? When the machine tells you, right, if the machine says it's right, and says, I accept this document and this is the income, right? Then you don't have to worry about it because the loan's going to fund.
What
If
about
the machine made
underwriting?
a mistake, I'm gonna eat it.
Is underwriting also automated?
Yes.
So do you have underwriters?
Uh, Actually, no. So we have, I think we're down to like 6 people. Okay, and they're like these 6. They're like geniuses, and they're the ones who worked with me for years to help train the system.
Yeah.
So
Pavan,
so
Pavan, we have limited time, right? So I want to keep hitting you because you have so
yeah,
much,
sure.
you have so much insights to share. So I apologize in
Yeah,
advance for my style and that I might be
no
cutting you off
worries.
a little bit, but it's like, I'm trying to, obviously you're making an impact. You're trying to make an even bigger impact. You're on here with me right now, sharing how you're doing what you're doing. What fuels you? What is your purpose, and what role do you want to have universally in the mortgage business to help everyone turn the corner?
Yeah, I mean, what fuels me is helping so many people, right? And getting all these people into homes, getting them into credit, because the next wave of products coming out with Angel is the whole suite of finance product. We just rolled out insurance, homeowners life insurance has just been rolled out, and we got the entire suite, like from credit cards, student loans, and everything. It's a complete financial success. And we also just rolled out our blockchain and wallet capabilities. So with that, we can go really globally with this and deliver tokenized credit all across the world.
You understand when you say that 99.9% of the people that are watching this are going, what the hell does he even mean? And when, if ever, will I understand this?
I do get that. I do get that. But you asked the question. So where
No,
we're
I know.
headed with it.
I'm
So
saying that. I'm saying that because it relates to, it's a compliment, really. I'm
yeah.
saying that as it relates to how everyone turns the corner. Like, what's going to happen if everyone in the business just, or the majority of people like me and others in that 99.9% just age out? I mean, is the transformation going to happen with or without us?
That's why we had that conference, and you were there. It's the Congress is this week is crypto week. They're passing all the rules this week, and I've been watching it. It's just going through it. They're winning by it's getting passed by thin margins, but it's getting passed.
Okay,
Right?
so let's go there then. So what's that going to do to change the mortgage business? What are you seeing that leads you to go, wait a minute, this is a watershed moment I want to tell people about?
Transactions become instantaneous, right? So, for example, simple thing like a wire, right? A wire costs $15, and international wires are even more. Okay, and it could take a day. You want to fund today. You make sure you get the wire request early in the morning, and then you get the money to the table, right? Imagine you're funding, and it's instantaneously in a second. The money's at the table, and it's done in a smart contract, so that there's no closing agent to disperse the money. The smart contract says, oh, everyone has clicked the sign button. Okay, everyone is electronically signed these documents. Okay, the stable coins are released to all the parties.
Okay.
Right. This is going to happen like within,
And who gets the stable coin? The consumer?
The seller, the any party, whoever would have gotten the dollars and from the some settlement statement.
And so that will be worth the amount that they sold the home for, in theory?
Because the stable coin is 1-for-1 for the US dollar.
Okay.
Right. So, that's just one example, right? Now, you can then do this globally. We can start closing loans all over the world this way. right? In dollar denominated or the local currency in rupee or in francs or well, there's no more francs. It's Swiss francs, I guess, in
Yeah.
euros and whatever, right? So, and remember, 30% of U.S. real estate. Okay, people forget that 30% of U.S. real estate is sold to foreign nationals, and people coming in from Asia and buying real estate in the U.S. because it's still the best place in the world to live.
And so this will make them transacting easier. I'm not sure I want that, honestly, because it's we have a lack of inventory here. Like, well, no, what would you say? No, it's a real question. Like, what would you say to that position of someone saying, well, we lack a surplus. We need more inventory to solve the affordability crisis.
I think that's good news, because guess what? That creates a lot of jobs in America, right? And that also, Florida is now passing. California passed a law for creating ADUs. Florida has just passed that same law, right? And I think other states are going to do it. I think the biggest, I'm from LA. The biggest problem in LA is so hard to construct there, right? Half your cost goes into the 2 years to get the permits. Let's fix those kinds of problems, right?
Okay. Well, how about the problem of archaic underwriting and not considering the gig economy enough? Do you have? I'm sure you have a comment on this. You're addressing it yourself, but how do we right size that? And do you have any hope that underwriting guidelines are going to change to reflect the environment that we live in today, not the one from 19 whatever?
Yeah. So that goes back to the example I gave the traveling nurse. That's an example of a gig worker, right? It's not that the guidelines don't support it. It's just that the guidelines are difficult, right? It's a lot of work to go through 20 W-2s or 5 1099s and so forth, right? And not make a mistake. Okay. So, but if the computer is doing it, for the computer, it doesn't matter whether it's 1 or 10 or 100. Right. So you drop in 20 W-2s for a single borrower. It doesn't care. It's going to come out. It's going to be accurate. So the problem is already solved.
So another question people might have, which I was going to ask you until I heard another one of your interviews, was will the GSEs accept a completely automated process? Will the agencies purchase a loan where they know that AI was the leader from cradle to grave? I heard you talk about how the government said they're okay with AI decisions as long as you can explain the decision. And so go into that a little bit for us.
Yes.
Some people might be wondering, like, would the government even buy a loan and take it if they knew that a human never looked at it?
Yes. So that's a multi-part question there. So the first is, will the government buy a loan if a human didn't look at it? And the answer is yes. And we've already, so 2 years ago, the FDIC, it was the OCC, sent out a circular that said, if an AI makes a banking decision, right? They weren't just talking about mortgages, but in broad, if the AI runs your bank, that's fine. We have no problems with that. As long as you can give us a log or a printout or something that says how the AI made those decisions, why those decisions were made. Okay, so to that note, I think a year and a half ago, AngelAI has already gone through a complete FDIC audit. Okay, where they looked at loan files that were fully decisioned by AngelAI, and we've provided them the whole backup, basically the hundreds of thousands of test cases and the decision log, the decision tree, how it makes the decisions, and they're like, okay, you passed. This meets the requirement. Now, what I said there is actually really hard to do. It's really hard to have an AI explain why it did something. Okay, and that's the magic of AngelAI is the architecture on which it's built. It's to be able to go back to, as it makes decision, it can explain how and why it came to that decision.
Got it. One thing that stood out to me that you said, I really loved. This is just a side note. Clients are going to come to your magic. I love that. That's pretty cool. That's pretty cool.
Well, I mean, look at your company. It's magical. I mean, you guys are huge. You have attracted all of these loan officers. It's because of your magic. You have all these followers on social media. Greg Sher has a certain aura and a magic about him that's attractive, and people resonate with and say, hey, you know what? Being around Greg is going to make me more productive and more positive. Right? And that's what business is all about. People work with people, not with companies.
Well, it's funny because that's how I feel about you. Yeah, so I'm going to put this notepad away, and I'm just going to ask you a few other questions here. I've gone through my notes. All right, so you've got wholesale, you've got correspondent, you have retail, you've talked about AngelAI, and you've talked about what you're accomplishing and what is yet to be accomplished. What opportunity is there for companies to work with Pavan and with AngelAI? I mean, does it have to be on the wholesale side? In other words, for IMBs, which represents, I don't know, 65% of the, volume that's put through, like, is there a use case where they can link up with you and benefit from a lower cost to produce and the technology that you're talking about? What's that look like?
Yeah, there's absolutely a use case for that. We call it AI delegated. So you literally take your loan officer, point them to Angel, okay, and Angel will get it right to the point of releasing the wire, okay, and then we'll instruct you to release the wire, okay, and once you release the wire, now that note is yours. You own that collateral, okay. So you have one or two choices at that point. You can deliver the loan to SunWest, right? And because we have a guaranteed, if Angel instructs you to send out that wire, you have a guaranteed takeout with SunWest. So no matter what, we're going to buy that loan. Okay. So, or you could sell it away. You could best exit and sell it away, right? And then Angel will charge you a fee.
Got it. Anything else you want to add to that before I ask a follow-up?
Yeah, no, I mean, our best client, I mean, our first and best client on this is Quantic Bank, and they're I think James did a podcast with Lincoln about this. So they're a non-QM lender, and they want to do agency. They want to scale, and they don't want to build out the whole operations platform. So they went down. They connected with Angel and went down this route. So now they're out and they're having a great time recruiting loan officers and plugging them in Angel, and off it goes. They have zero operations.
Yeah. So I had talked to you about. I mean, that almost sounds like wholesale, but you're not saying that that's.
It's not.
Got it. Okay. But if you're an IMB.
Mm-hmm.
And you're intrigued by this conversation, and I would imagine quite a few people are, can you take one branch, plug it into your system, and ride along with you? And what's your confidence level that you're going to drive more profit to that lot of loans than had they stayed underneath the umbrella of their IMB?
Well, the fact that you could take one branch, you could take one loan officer and run it in parallel. I mean, you could just take one loan. Right.
I would imagine your pricing's pretty good.
Yeah, the pricing's great. Right. But then when you take our great pricing and then you take out, okay, you're probably going to save 25 basis points right off the bat just on technology expenses. Now most people are locked into those contracts, so you don't feel the savings. But from an accounting perspective, you're going to say, hey, I didn't use it, so let me not charge it to this loan. Okay, so you'll save 25 basis points on tech contracts. You're going to save, all those people that won't have to touch the file now. Okay, so when you add the 25 basis points you save on tech, and you save probably another 50 basis points on LOAs, processors, underwriters, and closers, you're at 75 basis points to 100 basis points.
Yeah, but you also have to get into your system, though, right? So if I'm using Encompass or my own LOS, don't I need to use yours to originate that loan at that point, or could I still use mine?
You should no. So that loan officer that you test with, he will start from the beginning on Angel.
Got it. So also, great. I'm glad we're going in this direction. Angel, do you ever have to leave a system, or are you in that for the CRN, the LOS, the appraisal review, like the funding, the shipping, the insuring, the whole capital markets? Is all that in that one system?
It's all in Angel, and Angel also has There's another system where it's an add-on or works with Angel. It's called See My Loan Status. Okay, so that's the web interface to the same thing. So
All right.
so you could, because it's all one system, whether you want to look at it in a chat mode, have a chat conversation with what most people want to do, just tell me what's going on, right? Or if you want to look at it in a traditional web screen, you can go to See My Loan Status. So inside See My Loan Status, you have Angel, like See My Loan Status big, Angel small. It's a little.
Okay, so those people that are interested, where do they go to find out about that? Don't give me a website if you can help it. Give me an email or like a contact number or something.
Yeah,
right?
if you want to find, just connect with me on LinkedIn. That'd probably be the easiest way.
Got it. All right. I want you to, I'm going to say a sentence. I want you to finish it for me. And I want you to be as honest, brutally honest as you can be. When it comes to adoption of AI in mortgage, companies largely are what?
It depends on what kind of company. So lenders are scared. Brokers are curious, and once they get to know about it, are excited.
Okay, let's that's good. So it sounds like brokers are on their way. Let's talk about lenders then. That's also the world that I happen to live in. How far behind are IMBs?
Really, really far behind.
And what's your advice to C-suites watching this right now, trying to figure out how to catch up and what should they be focusing on?
Just talk to me. I mean, I'm an open book, and you look. Just AngelAI is open access, right? It's not open source, but it's open access. Just go in and try it out, play with it yourself. And one of the things you could do, and it's going to take not even an hour of your time. You go to Angel and you just say workshop, and she'll schedule like on demand. One of my humans will appear. They're experts, and just like Uber, and they'll walk you through it.
What are you trying to do? Why are you trying to help so many people out? What is your goal here? I'm serious. Like what you're inviting people basically to take market share from you. Someone could say. I know there's a lot to go around. I get it, 2 trillion, whatever. I mean, it's a kind of a tongue-in-cheek question, but I want to know what's driving you to want to help.
Yeah, so I'll quote Einstein for that. He said, "The greatest force in the universe is a compounding rate." Okay, so our user growth is compounding, right? So we had 10% growth month over month, 1 month. The next month is 23%, and the next month is so forth, right? So you have this compounding interest rate of user growth, right? So at that, when you compound that rapidly, and we're going to be at millions of users very soon.
All right, listen, before I let you go, you just reminded me of something. My understanding from talking to you is everybody that gets in your system automatically gets a twin.
Not quite automatic, but yes, everyone can get a twin. Everyone goes into.
What is the twin? What is this twin? Is it, do they talk like me? Do they sound like me? Is it just, what is it?
Yeah, it's a, you upload a little video of yourself. You upload some 2-minute voice sample, a 2-minute video, 2-minute voice sample, and an HD picture of yourself. And the twin will take a loan app and basically answer anything that AngelAI would say, the twin would say in your voice, in your face, right? And you can also tell the twin, instruct the twin to say, hey, create a video that says XYZ. And it would create that video, and you can use it on social media and whatever. So you don't have.
And it looks like you. It sounds like you. Yeah. How long does it take to set that up?
2 minutes. You just go into you have to download the app because you have to set up the twins tied to the blockchain wallet. So because inside AngelAI is the blockchain wallet, so you have to go and download the app from Play Store or Apple Store, install the wallet, just type wallet, installs it, and then you type twin. Then your twin's up and running.
Again, complicated to most people listening to this, but exciting nonetheless. Like to hear that you can do that, and you can do that quickly.
It's really simple. I can even give you the website to go to do it. Or
go ahead and do that. What is it?
Just go to angelai.com/points, POINTS.
Okay, another question, and then I'll close this out. When it comes, this is another finish the sentence thing. Mm-hmm. When it comes to loan officer compensation, in a world where AI handles the majority of transactions beginning to end, loan officer comp will likely settle in to what range?
I think about 75 to 100 basis points.
Okay. Well, that's hopeful. Why so high?
Because as long as I've been doing this, no matter how you spend the money to gain a lead, right? It always ends up costing you the per closed loan cost for a lead, whether you do advertising, direct mail, or loan officers knocking on doors. Your per closed loan cost ends up being about 75 basis points.
What is your opinion on all the consolidation in the business, and in particular servicers partnering with originators?
I don't have an opinion on servicers.
Okay,
I guess you're talking about the latest thing with
well,
Rocket.
Mr. Cooper, and then Guild being purchased by Bayview, Lakeview. Like, I didn't know if you had an opinion on whether this is just a passing phase. The reason I'm asking you that is because what you're saying to me in the question that I just asked you about comp is, hey, the loan officer is still going to matter. They still bring in the relationship, right? That's what I heard in my head. Yeah. So I'm thinking to myself, because I've got this voice in my head saying to me that these plays are more about retention and getting the consumer that's in the book already. I don't see a solve for the consumer, the first-time home buyer, like how Mr. Cooper is going to solve that problem, because it's not in the book. That's why I'm asking you that question.
Yes.
Anyway, right. So now you know.
Yeah. So Rocket buying Mr. Cooper, I thought that was a brilliant deal. Congratulations, Rocket, because if you looked at what they paid versus on the cost per loan, so they acquired a bunch of servicing really cheap, like 30, 40 basis points or something. It comes out to be, right? When servicing on the open market trades at 125, 150 basis points, right? You go to 6, 7 multiple, right? So I thought it was a hell of a deal. I congratulate them for making an amazing deal. It's a great trade. And the second half of the trade, to answer your question, is that now those customers are in their book and they can get the follow-on refi business from those customers. So their cost of acquisition of those customers is not 75 basis points. Is going to be in single digits, right? So that's second reason it's a great deal. But it doesn't for your first-time home buyer, for your purchase. Whether first time or whatever, your purchase business, I haven't seen anyone solve that problem where they can get that down below 75 basis points per closed loan.
Got it.
Right. Or something, even refis. These days, refis, when it's not in your book, right? You're just spending $3,000-$4,000 a closed loan to do a refi from marketing.
Yeah.
Right. So that's a point. It's hard to make money doing refis right now.
Yeah. How big are you trying to get? What when you look at it, your vision, how big do you think that, AngelAI, SunWest, like what is the goal? Right now you're doing 400 million a month. I'm sure you dream big, right?
Well, we take all the steps to get to become big, right? So if like goes back to what I said about compounding series, right? And why it's out there, why it's an open access platform. There's two reasons. Number one, as an open access platform, more people use it, the more it learns, the smarter it gets, right? So that's number one. I need people hitting it and trying it out and stumping it. It does get stumped, and then that's when it learns. Number two is at this rate, we have over 200,000 users on it. About 70% of those are industry professionals. Okay. And at this rate of growth, we're going to have just about everyone in the industry on the platform, at least every loan officer on the platform, right? So that means
by when?
Well, if we just said 15% month over month, I mean we'll add another 150,000 users by the end of the year, right? And there's only 100,000 licensed loan officers in the country that are.
Yeah, the number vacillates.
Right. Yeah. Right. So, I mean, by the end of the year, just about every loan officer will be on the system at using it at some level.
Okay.
right?
Have
So
I failed to ask you any questions? I hope I didn't drill you too hard. I didn't know if you thought this would be us sitting down over eggs and coffee like the other day.
I don't mind.
Did I leave anything out there? Is there anything you want to say in closing?
Yeah, I had a thought in my head, and I'm having a senior moment. It just, oh, well, yeah, you'd asked that about setting up the twin. It sounds complicated. There's a couple of steps, right? Especially if you've never used the app, you're like, okay, what do I do? Right, and that's why we have the workshop, right? So just go in the app or go to angelai.com/workshop, one of the two, whatever you want to do, and request. Just it's on demand. Request it, and someone will show up, and they'll walk you through it. And
I hope you have a lot of staff for what you're asking for. So
it's very effective. It's very
all right.
effective.
Well, I think more than one or two people are going to follow that gesture. And you've been very generous with your time. I'm enjoying developing a relationship with you. I thank our mutual friend David Lycan for telling me all about you and saying you were a guy I had to know, and it's very clear why that is. And I appreciate how generous you are with your time and your knowledge, and look forward to continuing to deepen the relationship with you.
Yeah, no worries. Anything else you could think of that?
It's probably a lot of things. I mean, the only thing I'll say is there will be people in the comments that are going to have questions for you. Yeah, so, provided they're nice and they play nice, hopefully you'll take a few minutes to answer some questions.
I always do, and DM me. You can DM me on LinkedIn or Instagram.
All right.
And I'm happy to engage in. And again, I'm an open book. I everything I put out there, right, is there's no secrets. The only secret is the code and how we do it.
Yeah. Pavan Agarwal, CEO of SunWest, the creator of Celligence, the founder of AngelAI, and Lord knows how many other companies you have.
And the guy wearing the crazy shirt.
And I understand, is it still a thing where someone can go on to AngelAI and ask for a T-shirt and you'll send it to them?
Yes, you can. Yeah, that's a good point. Yeah, you can go to Angel. There's two fun things you can do with AngelAI. Two of many fun things. First is when you go in there, you just say T-shirt or give me a T-shirt or whatever, and she'll send you a T-shirt for your size.
I'm going to do that.
Second is you can say slots. Or play slots or whatever, and there's a fun little slot machine game in there, and she doesn't take a quarter. She just you hit spin, and you can win all kinds of cool prizes.
2030, how much is one Bitcoin worth?
I think there's a lot of people saying it's going to $1 million before it goes lower. So let's see. You don't
want to answer the question?
I have no idea.
I know, but you probably. Yeah.
I know. Actually, I don't. I follow crypto and all this stuff because of my love for the tech. Because I think the blockchain tech is amazing. It is. Think about how revolutionary the technology is. It's a single standard that 8 billion people across the world can agree on one thing. Right. A ledger entry, right, is the one fact, one truth that every human being can agree on. That's never, in all of humanity's existence, that's never happened. There's never been such technology. Right? So that there is truth
in the blockchain. Yeah.
Right?
Agree.
There's a point of truth where everyone agrees. Okay. So that's almost spiritual. It's almost divine. So what you can do with having that kind of technology is so much more than just Bitcoin. $2 trillion doesn't even scratch the surface. That's the market cap of Bitcoin. Who cares about Bitcoin? Right? This technology is so revolutionary. Everything what we do is going to change.
Yeah. Well, you're clearly excited about it. I appreciate the passion. We'll continue to follow your journey. Pavan, thank you so much for joining me on One for what was a fascinating conversation. Also, thanks to Gene DiPaolo for pushing all the right buttons in the background. We'll see you next Monday, folks. Until then,
thank you, Greg.